Welcome back for another S&P 500 and stock market news weekend deep dive. My name is Justin, and we're going to try to figure out what exactly happened in the stock market this last week because there was a lot of volatility, including Evergrande, Jerome Powell, but the bulls showed up, and I think they won. There's another W showing up on the chart, and we're just going to try to figure out whether or not the bulls have any momentum to push us to the promised land. I'm talking about new all-time highs. Are we going to make it up to the S&P target for Goldman Sachs by the end of the year of 470? Or are the bears going to step up, come out of hibernation, and show these bulls who was boss? So the first thing I want to focus on for this weekend's video is just going to be this first chart here. So going through and doing a little bit more analysis to be better prepared for this video, I'm noticing that the seasonality chart might be giving us one of two options. Option one is going to be that we are going to reject off this area here, and we are going to resume lower to form the actual W into October, not only into September, but into October. So that is option one, right? We got 1, 2, 3, 4 tops. Here we got 1, 2, 3, 4 tops, and we got the cut. So that's the question: is are we going to be doing option one, or are we going to be doing option two? Either one is a win for the bulls, to be honest here. So we're just watching to see whether or not we're actually going to maintain and hold these areas. If we do, fantastic. If we don't, I'm looking for a rejection around 447, 447.1 to be precise. And the reason why I'm looking for this one here is because there's a potential head and shoulders neckline here where we can see that on a future chart. We're going to look at it in a moment here, but that's the thing we're looking at here. If you've been following this channel for any length of time, I would really appreciate your thumbs up, and please drop me a comment. Might seem like a small gesture, but it really goes a long way to grow our channel. We almost have 1,000 subscribers too, right? I'm really, really, really grateful. So what I want to try to just step back and focus on here is that, again, back in June, we said the June dip was over. What happened? New all-time highs. Stock market crash was over. We tried a couple of extra thumbnails with some weird ones. Then we went to stock market crash 2021. Well, here the stock market crashed. And then we said blow off top. Well, the stock market did kind of blow off top. And then we talked about, is the dip almost over? Not is it over? Well, it appears like it's almost over, right? We had our technical breach after a blow off top. And now we're trying to find out whether or not this is still support. What we're talking about here is the 50-day moving average. So really, really, really important area. And as long as we close above it, it appears like it is support. So that's the easiest thing to step back here. I really want to thank our audience for supporting us as we grew the channel. And I really like doing these videos. So I'm trying to get a little bit more professional. As you can tell, I'm wearing a suit and a jacket, trying a little bit harder today. And I'm really prepared. I think I can get this video down to about 20 to 25 minutes. So again, option one, option two, drop me a comment. Let me know what you think. Or maybe you're going to be like, you know what? Bears are coming out of hibernation. They're going to not just hit it to a lower low. They're actually going to take it down to 400. Let me know what you think. All right, so that is the easiest way to explain what's going on here. Now what I'm going to try to do is something new. I'm going to go through and actually talk about the S&P 500 technical analysis at a high level here, explain the overall notes, and then go through and explain how we got to this got to this analysis here. So monthly, we can see here that we got a monthly chart. Again, we got a hammer after testing 420. So all that means is that I was looking for a buy pocket of 422 to 428. We didn't quite make it to 428, but that's actually a good sign. We technically went inside the 420s, and then we bounced all the way back up. Notably, we're back above 438.5 here. That is going to be a really important area here, where we closed and opened the two previous candles. Important to also note that we're going to be closing out this monthly candle on Thursday, and we have quarterly rebalancing happening at the end of the month. So again, we're just watching here. We need roughly 444 to maintain this uptrend into October. Looking here at the weekly chart, we can note that again, we got a new funnel higher here. I've now revised it. We can see that we only have one breach. Otherwise, we're going off mostly wicks here. It looks accurate to me. We bounced. We're still clearly funneling higher. And the note here is that I have a revised funnel. I see an apex until late October at 436. What does that mean? Well, we could be forming a W into here, right? Form a W and land in October, meaning late October. All we need to know is that we are going to be above 436 into the 3rd to 4th week of October to show that the bull rally is intact and we're going to be advancing into the end of the year. 436.1 is a monthly low. If we fail to hold that into the end of October, in my opinion, that is one of the catalysts we want to watch for the bears to be stepping up to take control of the chart. Looking here at the daily chart next, we got 436 to 447 as the range. You can see that by the green lines and the red line. So again, just looking here, we got 3 red arrows. The top one here is identifying a head. The other two identify a shoulder. So again, we got a short-term shoulder and a longer-term shoulder here. So are we going to make it up to 447? And if we do, what is going to happen? Meaning, are we going to reject or are we going to rally? The reason why this is particularly important is because Jerome Powell speaks on Wednesday. So again, 436 to 447 seems like the likely range for this week. Might go lower, might go higher. You can note here that I got a lot of grayed out lines at 435, 431, 428. That's just so that they're still on the chart, but they're not visible. It's not noisy. So what I did going into this week is that I turned them back to white. And if we do start making movement back down below 440s, like say 436, closer to that, I'll just resnap these lines to be a little bit more visible. And again, if you wouldn't mind smashing the thumbs up, I know I've already asked, but if you guys are still watching, please just smash it. You've already been watching for 5 minutes. I would really appreciate your support. And again, if you wouldn't mind subscribing, if we get to 1,000 subscribers, we're going to do a giveaway on the next video after we hit that 1,000 subscribers. And we give away good prizes at Blaze Capital. So I encourage you to smash the thumbs up, subscribe, and drop me a comment. Please and thank you. All right, so this is particularly important as we go through to shorter time frames here. Why? Well, Jerome Powell speaking at noon on Wednesday. The reason why this is particularly important to me is because we're going to be finding out whether or not we're going to invalidate that head and shoulders. If we're going to be maintaining this blue uptrend, we're going to be landing at 447.1 or the previous top at about noon on Wednesday. What does that mean? Pass or fail on Powell. Powell pretty much drove us higher, so I think he's going to drive us more up. Call me weird. I think we're going to go higher. What's also very interesting to me, I did some math. I did this math yesterday, and I was just looking and seeing, okay, well, now we've had a correction, right, or a 5% dip, whatever you want to call it, right? I don't even know what a 5% is. That's like a cut. I don't even know what a 5% dip is. A lot of the talking heads don't even know we had a 5% dip yet. They're like, oh, nothing beyond 5%. We've had a roughly 5.5% peak to trough cut now. And what's very curious here, if you look at the chart, is that I've been using Fibonacci extensions to find out the next targets. And again, very, very, very curious here. What do we got? Well, if we go from the peak at roughly 454 and we go all the way down to the trough just below 430, what do we get as our first Fibonacci extension, or the 161, which is the dotted line? Then we got a second dotted line up here, which is the 261. We can look over here and see that, oh God, it's 470 and roughly 495. We know those levels, right? That's the Goldman Sachs 2021 and 2022 targets. They're looking for 470 into the end of the year and 490 into the end of next year, 2022. So what's very interesting about this is that if that's it, if that's the correction, I can easily see us going to both these levels into next year. So maybe the crash is over, right? Stock market crash 2.0, I think it might be over. And then again, looking here, we got the seasonality chart. So again, if we fail at the 447 head and shoulders, we likely go to complete the W into October, meaning we're going to get a pattern similar to this. Is it going to be a lower low? Is it going to be a higher low? Is it going to be a double bottom? I don't know. I honestly don't know. Just watching for the reaction. And again, that's what we're looking for here. So that's the most important stuff here. That's the S&P notes. So let's jump forward to the next section. I also have my notes prepared below here. If you are a member of the group, just feel free to pop over to the SPX channel and have a look below. There's also some algo clues. I'm talking bigly clues, right? So if you're a member, again, you can click on that section right there for algo clues. And if you're interested, we do have a 7-day free trial. I'll drop a link in the description where you can go back and find all the notes for the S&P here. And again, including all of my individual trades, my buys and sells. I'm up about 35-40% in about the last 3 months. If you're curious to know what stocks drove that performance or which stocks I'm holding for the next move, meaning the blow off top into the end of the year, join us for a 7-day free trial. I think there's going to be tremendous gains between now and December. Moving forward, so that is the S&P analysis, but what drove it? So now we're going to take a quick look at our show schedule here. And let me know the feedback. I think looking at the technicals is the most important thing, and then doing a look back is really good. So now talking about the weekly notes here. Well, what do we got? Well, these are mostly the notes from last week, by the way. I didn't really change very many of them. So I think it's Evergrande, right? It sounds like a coffee, right? It sounds like a Starbucks coffee, right? Evergrande. Yeah, I'll take an Evergrande. Right? Hold the foam and add on some whipped cream, please and thank you. All right, Tina, there is still no alternative. So where do we put our money? Probably U.S. assets, right? Well, again, look what happened around the world this week, right? Oof. The U.S. looks a lot more appealing now than it did before. And what was very curious, we'll look at this a little bit later, but look at the 10-year note. It had a dramatic advance going into Friday. We can have a quick slide here, actually. So again, just look at this move, right? Whoa! So the 10-year, or the TNX, is up by about 13% in just the last three sessions here. So that's pretty incredible. Why is that incredible? Well, we know that junk debt around the rest of the world kind of looks like junk. Oh, nice coffee. All right. Apple impact on S&P. So we were looking at Apple, and we were looking at Apple to match the seasonality chart and to show us that, right? Everyone kind of thought this Apple event was a flop. Well, we got the same thing here. 1, 2, 3, 4 tops. Please watch last weekend's video if you want to see the analysis on this one. We went through at the very beginning. So all I really want to see from Apple here is that it can actually advance back above the 50 DMA. Otherwise, QQQ, XLK, SPY, already above the 50 DMA. Maybe Apple pre-sales in the United States is what's going to drive that chart higher. Pass or fail the 50 DMA. We went below. We're popping back above, at least initially. I think going into Wednesday, that's the really important date here. So this ended up being bullish for the market, but you have to put a caveat beside it. The reason why is because we've heard that the Fed's dual mandate has pretty much been met now. What we know is that Jerome Powell told us that the inflation target's pretty much been met, and he doesn't need like a blowout jobs number to say that the dual mandate's now been met for employment and price stability. So tentatively, if the number comes in line in the first Friday of October, I think it's going to be on October 9th. October 1, I don't know if it's going to come out then. That's the first Friday of the month when we get non-farm payroll. And I think that if the September number comes in line or with a beat, we're going to be starting to bake in some tapering. Remembering that tapering would begin likely in December and be announced in November, ending in roughly this time of 2022, mid-2022. So again, announce in November, start in December, finish roughly mid next year. Jerome Powell also said that we're not on a preset course, which means that we're shifting and adapting based on the ever-changing economy, the environment, and making sure that we're being accommodative. It's also very important to note that dollars printed in the U.S. are actually delivering a better ROI. A better ROI because they're getting more consumer confidence, more consumer spending, no inflation, and job growth, right? That's exactly what the goal was. So it looks like Jerome's a really smart guy, right? He looks really, really, really smart. Also, just a quick touch point on our dip buying plan. I think that by now, people understand the value of actually preparing a dip buy plan. Whether or not it actually happened, flexing that idea muscle and just checking our portfolio periodically to make sure that we have high conviction stocks means that when we have to flex that muscle, it's going to be strong. Yeah, it's going to be strong. It's important. It's also important to note here that if we are going to go and complete that W pattern on the S&P, it might be caused by Evergrande, right? Why? Well, on Thursday, they actually did not make an interest payment to their U.S. debt. So why does that matter? Well, they've entered a grace period. So it's a 30-day grace period, which means that Thursday, Friday, you're watching this on Saturday, the 25th, and 28 days from today is when they would default on that U.S. debt. I believe this is $20 billion. So it's $20 billion out of $300 billion. So it's not really all that meaningful. It's not nothing, but this is likely not going to have the Lehman moment that everyone's been calling for. Why? It's mostly in China, right? It's mostly inside their own economy, and a lot of it is actually held by the government. So I don't really want to talk about Evergrande here. Again, I personally think that this is not a Lehman moment. The contagion is going to be limited, and we got to provide it a great opportunity to buy the dip. We also note that, I forgot to actually show this here, the fear and greed index, where we're still very fearful. And maybe a really good point to show this now. So again, just looking here, we're still fearful, right? Neutral, we've gotten more fearful. And the market's green closing out the week. So people are fearful, we closed higher, we got a big shakeout. And the reason why this matters is because when I look here at the heat map, and I've talked about this on the streams a little bit this last week, but a year ago, people were neutral, right? And what happened? Well, the market went so much higher, right? Talking someone up 100%, 99.9%, 99.7%. Incredible. And people were scared. They're still scared today. So I think that with the targets from Goldman Sachs of 4,700 and 4,900 into the end of this year and next year, I think we're going to see roughly the same thing when we check back in September 2021. What are we going to be? Higher. Who's going to lead? I don't know. I don't know who's going to lead, but market's already scared. There's a whole bunch of cash sitting on the sidelines. I think we're poised to go higher. Notable events for this week. So the notable events for this week are going to include, Wednesday, we got Powell speaking in an hourly apex. Second focus is going to be that there's still no alternative and the dollar's king. So again, U.S. bonds are king, U.S. assets are king, U.S. dollar is king. There's no alternative. Third focus is going to be the November 445 straddle. I think these are actually November, December. So the reason why these matters because look where we close out on Friday, right? S&P is so strong, right? Oh man, this is a sexy, sexy stock. 443.91. We went through and did the analysis last week, and I believe where we showed that 445 straddle had $15 in premium. So that means that they start getting in the money below 430 or over 460. So they're expecting a huge move. And again, where did we actually bottom out? Well, we bottomed out at 428.86. Whoop! What does that mean? No payout for the straddle. So just looking to see whether we hover and flatline at 445, and if we make a move back to the downside or back to the upside, just watching for the velocity of the move. Also really important to note that we got quarterly rebalancing, and going to be watching for Thursday and Friday notably, and we have 4 out of 5 days that have expiry this week, meaning OPEX, so very notable. Here's the levels. I don't really want to show these because this is for our members, but here you go. Here are the levels for this week. We're going to be doing our actually, this is a good time to talk about that. So we're going to be doing our pre-market show on Blaze Capital starting on Monday. And I'm going to go back through these levels. So for this week, I'm going to show you what you might be missing and might not be aware of by getting into our group. But all the notes are in there. And we have the first video scheduled for here. Thank you for your early support. That's me right there, Justin, right? I got a smile on my face. You can see we're going to be starting at 6:15 Pacific on Monday. That is 15 minutes before the market opens up. So I'm showing you the numbers here, and we're going to go through those again on Monday. I have a new way of actually labeling this as well. I'm 60 out of 100, which means it's like the market's scared, but I'm actually starting to get a little bit greedy. Why? Last week I said greed with early confirmation. Now I'm saying greed with more confirmation, which means nothing's changed. Nothing is meaningfully changed. 443.5, it's roughly 443.4, but I'm calling it 443.5. That is going to be support 1 with our daily low in the 50 DMA. 440 is going to be a psychological area, and then 436.1 to 438 are going to be those monthly levels. 438.5, 436.1 to be precise. Buy pocket 1, buy pocket 2. So what happened? Buy pocket 1 pretty much hit. We're still 1 point inside of that buy pocket being here at 443.9. So if you took advantage of these discounts, they were nice. Again, we didn't quite make it down into buy pocket 2, so again, if we go for that lower low on the W, just make sure you got a little bit of buying power left over. Resistance is going to be 445. That's a straddle. 447.2, again, that daily head and shoulders neckline. And then 450 psychological. There we go. That's all the most important stuff at a high level here. Now we're going to go through the calendar of events. And at about 18 minutes here, I feel like I've actually done a really good job of laying the plan out very clearly in a short amount of time and adding a lot of value. If you agree, smush that thumbs up, please, and thank you. Looking at here for the key events that are going to drive this week. Again, we know that Wednesday is going to be an important hourly apex test. We got Christine Lagarde speaking on Monday and on Wednesday. So actually speaking on Monday, Tuesday, and Wednesday. What's more important to me is that Fed Chair Jerome Powell speaks at 11:45 on Wednesday. So looking for the reaction from noon into the end of the day as the confirmation. Also notable here that we get manufacturing numbers out of China Wednesday overnight. And again, real estate's been a big part of their economy, so I think people are going to be watching this number pretty close. And then we got initial jobless claims as the first indicator for a new data point for Jerome Powell on Thursday. So a pretty light week. And then I forgot about this. So last thing to show here is that on Friday, October 1st, we're going to be getting CPI. CPI is important. There's also a P right here. The reason why there's a P is because it's preliminary, which means the first time we're going to see this number. So we got German manufacturing PMI, we got CPI numbers out of Europe, and then we got ISM PMI out of the US. So these numbers are likely going to matter. I'm not sure what they're going to come in with or whether or not they're going to be bullish or bearish. What I would say is that the number that's likely the most important is going to be the ISM number for American traders because again, it's important, but remember, this is a PMI, so it's not the it's not the most important number. What we really want to see is going to be the CPI number out of the US, I believe, next week. Again, we got an article here from Cramer's. So again, Cramer's week ahead. We're not headed into we're now headed into the calm before the storm moment. I don't know what this means, right? Get ready. After next week, the onslaught of earnings and the labor department's all-important non-farm payroll number will strike. I don't know, right? This guy's been a very good contrarian indicator. I think he's still a contrarian indicator. So, right, he's saying we're going for an onslaught. We're going to calm before the storm. I think we're just going to go up based on what he's saying here, right? He's always wrong, right? I think retirement's going to treat this man well. Ugh, very tired of talking about him. If you want to know more about Evergrande, China, Bitcoin, all that stuff, I'd encourage you to go watch Ray Dalio's video. Bitcoin took a huge hit this week on Evergrande and China, so really good article here. I really respect Ray Dalio. There we go. Tom Lee, this is from a little bit earlier this week. He was talking about get ready for the everything rally. Well, I think that we're actually getting ready for the everything rally. Finally, U.S. deaths may be peaking. Biden touts boosters. What does that mean? Well, again, this is from Bloomberg, where if we're seeing the reopening trade coming back up in full steam, and we've now hit peak death, not just peak cases, I think that's really good, right? They're seeing a reprieve. Nice. Finally here, Ren, China widens ban on crypto transactions, Bitcoin tumbles. We did not see the U.S. markets go risk off on Monday, even when Ethereum dropped by 10% and Bitcoin was down by nearly 10%. So it appears that at least risk is being, we're remaining the risk on sentiment in U.S. assets. It's also important to note now that crypto is kind of becoming a U.S. asset class. Why? Well, China's basically saying that anything relating to crypto is now illegal. Touching it, mining it, transacting with it, getting money offshore. That's what I think they're actually scared about, is the money actually flowing out of their economy. Right now they're having troubles internally. They don't want money flowing out. So I think that the fact they're going in for a second time to try to ban it shows that it's actually more important than they might have initially believed, and they don't really have control. They should have already had this under control. It's they have to announce it for the second time. It's notable. So 22 minutes here. I'm going to start wrapping up. Only got a few more things to go through. Really just have to go through the options and then ETFs. And then again, Algo Clues. I'll briefly go through that on the private portfolio review, which I'm going to do after this video's done. Again, if you haven't already, please click that button. Make the thumb turn blue. Make thumbs great again. All right, so for next week, we got 4 out of 5 days which have expiry. What does that mean? There's likely going to be extra cuckage or extra manipulation. On Monday, we got a 443, 444 call spread versus 440 put. So, right, there you go. So here for Monday, again, here's the notes. You can pause the video if you want to take a closer look. Right, we got 443, 444 is being notable. And then we got lots of naked puts here at 440. Looking out till Wednesday, we got 443 and 440 put spread. So again, just looking here into the Wednesday when Jerome speaks, it's not really that heavy, but again, 443 and 440. That's what I noticed is standing out. Looking on Thursday, right, the 30th. So we got 4 expiries this week. 444, 450 calls, and 445, 440 put spread. What does that mean? It appears that 445 is max pain. So just noticing here that we got 30K in open interest at 450, and we got open interest and volume here at about 444. It's curious they chose 444 and not 445 as well. And then looking over here, we got 18,000 in open interest at 445, and then we got volume and open interest at 440. So it looks like 444 to 445 would be max pain. That's why I was pointing it out on the levels for the week. Again, I've already done all my analysis, so this is just the explanation of how we got here. Looking out to Friday now, this is interesting. So looking out to Friday, what's really interesting here is that we got a big call spread. So into October 1, we got 441 and 450 call spread. These were largely bought this week. We can actually even see that buying right here. Look at this, right? Oh, goodness, right? 441, 441, 441, 441, 441, 441, right? Millions and millions. And we can look and see here and see that the reference price, sorry, the spot price when they bought at 432. So S&P right now is at 443.91. They bought really good. They bought a really good price, right? 432. And then they topped up here at 430. What's really interesting too, when we look at this, is just that we can see they paid about 2.4. So, right, 2.4 when it was at 232.4, and then they actually bought down in the 430s and bought their biggest chunk when it was actually right around the same price, 249. Right, that's really interesting. So the VIX just did a really great job of keeping the premium high. Sorry, keeping the premium stable, because we dropped down by roughly another 1.5 points, and they paid about the same price. Really interesting. Moving forward here, again, Friday. So again, potentially moving lower into Wednesday, but then rocking up into Friday. That's a fat call spread. October monthly, again, we see continuation here, and we also see volume at 450. So they went really hard, right? They're buying these 450s here, right? 214,000 in open interest, and we got about 31,000 in volume. Then here we got, this is looking a little bit more notable. We got 450, 445, and 440 put open interest. No volume, though. November monthly, a lot, it's pretty naked. So no one's really positioning big one way or the other. I think everyone's kind of waiting for the shoe to drop, and then we're going to watch and see what happens here. So 440 and 448. That's what I'm noticing here. QQQ quarterly is going to be on Thursday. What I'm noticing here is just that this is going to be on the Thursday, and this is a little bit different than what we see on SPY. So again, down into Wednesday for SPY and then up into Friday. This is telling me that 375 looks really important here, right? 375, 378, right? Volume and open interest. Looks interesting. The QQQ monthly for October is also more skewed bullish. I'm seeing a straddle at 375, and noticing we got, looks like straddles, right? 380, 375, and then a put spread. Maybe even a straddle here too. I don't know. Why? These are worth $8. Those are worth $4. So half the open interest would be the same dollar amount as the puts over here. All right, moving forward to November. That's the only thing I'm noticing here is 369 puts. That's it. Looking here for flow. Right, we got SPY 441 calls are cashed up now. That's what we noticed for October 1. It's still sitting in open interest, so we have to assume that these guys are going to want to hold to expiry. And then that's what's notable to me, right? And then we see, right, 448 out to December, $12 million order. There's definitely some puts here. They're looking at 411. I think that's a little bit low, right? They basically need 400 in the next 3 weeks for that to happen. I don't think so, boys. Looking at QQQ. For what expires next week and beyond, it's basically net bullish, right? Those two are roughly offsetting. And then we got some here into the end of the month. So that's pretty much it for the options. Looking at the time, we got about 28 minutes. Time to wrap up. All right, these are going to be the individual ETFs that drive the market here. Again, I'm just putting them in order of what I think is important here. TNX, a notable uptick. So again, we talked about that, 6.5%. Huge move, right? 13% in roughly 3 days there for TNX. That's the 10-year Treasury note. XLE appears ready for a breakout. We're testing the relative low. So we got 1, 2. It's also a 50% retracement. Looks like we're trying to punch up here. Looks really good to me. XLF held the range. Close to a breakout too, right? We're only about 30 cents off from a breakout here. It's been doing a whole bunch of nothing. I think it's ready to go for it. Higher rates are good for banks, and the economy appears to be reopening, which is good for energy. QQQ. This is clearly the wrong chart, so I'll have to revise that one. QQQ, volume is ramping. Next week, open sets the tone. Window dressing week. So I'll just look over here. I'm sorry, I have a screenshot that's wrong there. When Mac did this weird thing where all the screenshots get put in order now, the first one is always going to be at the top right on your desktop. I'm used to dragging the oldest thumbnail. Sometimes I drag the wrong one. Looking here, what's important to me is that tech usually leads SPY. Sorry, chips lead tech, tech leads SPY. So right now, we're seeing that chips are strong. They didn't fade down with crypto, so it appears they want to go higher. Also looking here, we can see that QQQ, we can see that it bounced off the green line, pivoted off of the previous tops, and then made it above the red line in the 50 DMA. It looks like it wants to go up. This looks like a pivot to me. It's already closed above the 50 DMA twice, whereas SPY is now only starting to punch back above. What does that mean? I think QQQ is trying to drag SPY up, and we don't even have Apple above the 50 DMA yet. That's why I'm watching it close. All right, moving forward, we got DIA here. DIA chart looks great, ready to break up. Nice volume, right? Looks like it's ready to break up. It's really, really close, about $1 off. XLV, right on a key area here, right? Big test coming in at 132. Up or down? I don't know. Really, really, really important though. Just over 30 minutes, that is it. I don't have anything else to really go through. I appreciate your time. I'd appreciate your thumbs up. And please make sure to drop me a comment. So like I said, I am going to be on for a market opening stream. It's going to be public this time. We're opening it up to everybody at 9:15 Eastern. That is me. That is me. And you're going to recognize this channel if you've been watching these videos. So again, I would really appreciate your support. We're aiming for that 1,000 subscribers. Thank you very much for watching. And I'll look forward to seeing you either on Monday or next Saturday for another installment of the Week in Review. Thank you very much, and all the best of luck this week.